Hi. Part of the aim of these videos is actually to show how not easy it is to find a solution that would actually work, and that's why I will be probably going through many iterations from version to version to version until we find a stable one that actually shows some backtesting results. And so in the previous video we talked about a system that would use the distance between the two DMIs, right, and enter the market short at the point where there is a big distance between them that's like over 4 standard deviations away, right? And in this new iteration of the system I tried something different. Basically I'm entering the market at the point where it actually, like if we have a look here, you see on the previous bar what happened is it actually crossed crossed under the 4th standard deviation, so it was above it and then it kind of went below. So that could be a sign of the two DMIs coming together, right? But so that's one thing that changed. Another thing that changed is actually I added a take profit, right? So right now we have a max loss, which is a trailing now, right? So we set it to 3% from the entry price, and after the price moves from the entry price 3% towards towards our goal, we move the trailing up 3%, well in this case 3%, right? So that is just one of the, I don't know, one of the million ideas of how this could work or not. And so far the results are pretty bad, right? So if we spin this on, I don't know, S&P for 5 years daily, well, first of all, there are only 93 trades, which is, well, very little trades for such a long period. And well, there are not that many good trades, right? So overall we need to go further, and that's what I'm going to be doing in the second video, in the third video. But before I do that, I want to outline what actually I want to do, and it always just happens like that, that I start off with an idea which I think is going to work and it never works, so I have to combine all the ideas about this topic into some kind of a testing scenario, a light one, and see which one actually, well, might work, right? There's more chance that it might work, right? So right now we're actually looking at the DMIs coming apart, right? And we're looking at a situation where they're apart, and at the point where they're too far apart, we're going to be entering counter trend, sorry, right? So we're going to be entering the other way, right? So we're going to be bounce trading, like flat trading, or whatever you call it, right? So like if the market is moving up, at some point it's going to reach the DMI's boiling point, and at this point we want to like short, or if it's falling then we want to long, right? Haven't actually tried the long ones yet, so well, might be a good idea. So that's option one. So actually this system that we have right now, right, so we have pretty good understanding of how we want to enter, right? So we enter it at a point where it either crosses above or under the, I don't know, 4th standard deviation or 3rd standard deviation. That's like a matter of optimization actually, and that's one thing. And the other thing is the exit. So, and for right now the exit is something which the exit always spoils the thing. Yeah, well, we can enter, but we also have to exit. So there are a few ways that we can exit this thing, right? So we can say like, we don't care what happens, exit it in 5 bars or 10 bars. We can make a trailing stop, we can make a stop loss, like a fixed one, we can make a profit, we can make a condition exit, like an indicator condition, and all those variations are actually possible, right? And well, how do we know which one is better? Well, we're gonna try and actually test every single one of them, so we kind of get an idea, right? And in order to do that, I'm actually going to, well, I'm going to rewrite the strategy so it becomes a screener that we can actually optimize and see what parameters work better. Because for right now, the strategy code is designed in order to spin either on a full data set or on a single symbol, right? So what I want to do in the next video, and I'm not going through the code, right, guys? If you want to know how to code, that's a different story. Go to my website or contact me for consulting. It's no problem. And so these videos are more like conceptual, right? So after we are done with the strategy that will be designed in these videos, I'm going to start publishing signals, right? So, but the whole idea behind these videos is to let you guys understand that trade system design is something very, very fragile, and that a lot of things have to be taken into account. And I want people who subscribe to the signals for the US market, I want them to be able to understand why exactly are they entering the market. I don't want to supply signals that just tell people that, okay, so here's a trade system, go, and here's a signal and go, right? I want you guys to understand why, right? And so I'll be spinning this system in Wealth Lab and publishing signals onto my website, and there you can subscribe it. But we first have to get to the actual trade system. I actually did get to it already, but I'm just gonna take it the long way so everybody understands what it took to actually get to that system. All right. So this is concept number one, right? And we're gonna be coding it like this, right? And there is a concept number two for the ADX and DMI, which, because I want to cover ADX and DMI concepts on this system, right? Because I think they might work. Well, since it worked for Wells Wilner, I guess the guy's name, yeah, should work for us as well. Okay, so the other one, right, is where we actually trade the trend, right? So we want to ride with the price, right? So we will be looking for symbols that have been in a very narrow corridor, right, for a long time. So we'll introduce a time feature or a time parameter that will be looking at symbols that are inside this corridor, right, the width of the distance, right, so this thing here. Where is it? Yeah, so this width will be staying in the corridor. And as soon as it breaks out the corridor, like, I don't know, breaks out of one standard deviation, that's it. We're going to say, okay, the market start trending, right? So the lines, the DMIs have spaced apart, and the market should go somewhere. So we're going to go with the market, right? And trail it. And this sounds like an easier way. So basically, by the end of these videos, we're going to have two systems for the US market. One is going to be trend following, and the other one, sorry for the handwriting, and the other one is going to be flat, right? So stay with the videos, and I don't know how long it's going to take me to design them, but I'll be, publishing videos on every problem that I'll be facing, hopefully. So okay then, see you guys next video.